Greetings, this is Dwayne, CFRN. A quick video recap for the S&P 500 Emini Futures week ending 9/25/15. What you'll see are the Concierge Trade Alerts that were sent out over the course of the week to our subscribers and Concierge clients. The two large candles here, that's going back a week, Fed announcement. The following, or the Friday day after Fed announcement, we had an alert to be short below 1969. But the recap we're doing in this video will specifically cover the week from September 20th, Sunday night, Globex open, to the end of the week, Friday, September 25th. I attempt to get the alerts out on the Sunday night Globex open whenever possible by 6:45 p.m. Eastern. Globex markets open, the majority open at 6 p.m. Eastern. The Russell opens a little later. Soybeans open 8 p.m. Check with your data provider and see when you have access to the markets on Sunday night. Okay, we'll move through these rather quickly. On Sunday night, the alert was to consider being long above 1953 or short below 1940. On the short side, we dropped to 1938.50. We risk 8 ticks per trade. At 4 ticks profit, we move our stop to break even. That's everyone who's trading the 2420 blueprint. The 2420 blueprint is designed to take you from 1 contract to 20 contracts over a period of 24 months. Of course, we have partners and clients who utilize the alerts a bit differently. They use larger stops for larger gains. Now, on the long side, which said to be long above 1953, that triggered in the 4 a.m. hour Eastern. In that hour, we put in a swing high at 1955.50, 2.5 points. If in fact you are trading for the daily goal of $100 per contract, then there it was. Your day's done. Important prices and important areas are almost always tested. You'll see that in this video and in all recap videos. Price comes back to test the trigger. Off we go again. In the first hour of this trigger, we make it up to 1956. That's 3 points. Now again, here's 2.5, here's 3. To make our daily goal, we simply need 2. On this trigger, we continue the next hour, and we put in a swing high at 64.25. So from 1953 to 64.25, that's 11.25 points. If our daily goal is 2 points a day on a 5-day week, that's 10 points. That's sufficient to enable you to graduate as a 20-contract trader in 24 months. My point simply is that in this 2-hour period, you could have reached your weekly goal. That's how big the volatility is in the markets right now. But the day is not done. We're into Monday. Price comes back. Important prices, important areas, almost always tested. In this hour, we trigger and we put in a swing high at 45.75. From 53 to a high, of 57. So that's a 4-point move. Price drops back in the same hour below the trigger. Here we go again. This time we put in a swing high at 61 1/4. From 53 to 61 1/4, that's 8 1/4 points. Remember, our daily goal's 2 points. One more time. Price gets below the trigger. 1953. Swing high, 65. From 53 to 65, 12 points. I'll say it again. 53 to a high of 65, 12 points. So this was Sunday night and Monday, September 20th and 21st. Let's move on into Tuesday. Now this is the actual email that is sent out to the partners and clients. The first alert went out Sunday evening. Next alert goes out Monday evening. Important to note, the alerts are valid to be traded until the next set of alerts arrive in your inbox. So now we're looking to be long above 96 or short below 55. Let's have a look. We do not trigger long at 66. We do trigger short at 55. Now, this is a day where the downward momentum is so strong, we did not come back to test. In the initial hour that we triggered 55, we dropped to 43. From 55 to 43. 12 points. This swing down 34 points, 136 ticks. Do we expect you to get all of that? No. How much do we expect you to get? We expect you to get as much as your skill set allows you to. Where are you on the journey? How long have you been trading? Not taking shots at the market, but actually trading, learning how to trade. That's what we do. We teach you how to trade. This is what was available. From the trigger at 55, there's a swing low at 1919 and a half. Call it 1920. We'll round it up. I'm sorry, 1917.75. Nonetheless, we'll round that up to 1920. That's a 35-point drop. Looks like I rounded it down even more. 34 points. 136 ticks. S&P 500 pays $50 per point. There's 4 ticks to a point. $12.50 per tick. Huge day Monday. All right. Let's walk our way across. Here's Tuesday, the 23rd of September. And our alert for the 23rd, which went out the evening of the 22nd. And I had to send out a correction and add gold, or fixed gold, because I had not changed it from the previous evening. All right. S&P, we're still looking to be long above 96 or short below 1916. That alone tells you a lot. Okay, just the sheer spread between the long side and the short side. Why are there 2 trades per market? We have an opinion. We have a theory. We believe we know where the market's going, as does most every trader. When you look at a chart, if you have an understanding of markets and you've learned how to read a chart, at a glance, you can say this market's going higher or this market's going lower. If you're like me, you've had occasion to be wrong. We don't like to use the terms right and wrong. However, There are times when I might think the market is going higher, and in fact, I wake up to find out it is most decidedly going lower. What I will do to best serve our clients, if the market is going to rally, I want to give you the best possible long trade I can find. If the markets are going to sell off, I want to give you the very best possible short trade that I can muster. I want you to be prepared no matter what happens in the market. If all you trade is the S&P 500, and because I'm so convinced that I'm going to be right, and I only send you a long trade, and in fact the markets do sell off based on news or whatever reason, I've done you a great disservice. So I'm not going to do that. I'm going to make sure that no matter what happens in the market, you're prepared. It's not given unto man to know the future. Try as you might, spend as much money and as many years as you care to, you will not be able to know what is going to happen next in the market. Through the use of technical analysis, fundamental understanding, you can have a pretty good idea, but there's no way to know for sure. There is, however, one thing you can know with absolute certainty. You can know what you're going to do next. So what we like to do is we like to focus our energy on that which is knowable. We don't know what the market's going to do next, but we know what we're going to do next. If you have not tried that approach, I encourage you to take the free trial. Go to cfrn.net. At the top of the page, you'll see the link for the Concierge Trade Alerts. Click that, take the trial. 5 days. You'll receive emails just like this every night. You'll go into the market. We'll spend some one-on-one mentoring time over the course of the week. And then at the end of the week, you'll be in a position to make a well-informed decision as to whether or not this will change your trading forever. On Tuesday evening, I did something that I don't normally do. I did a little mini recap of the previous night's alerts. I also gave a secondary command for, or secondary instruction for the S&P. Long above 1966 or short below 1916. If the ES rallies up to 1936/37 and stalls, then consider being short below 34. If. Whenever you see if ... that means that's shorthand for if the opportunity presents. Okay? All right. Let's take a look. 1916 down to 1910.5. It's 5.5 points. 55% of your weekly goal. Price then rallied up to 1936/37, stalled out, and here was your opportunity to be short below 1934. Now, that important prices, important areas being tested, we see it here. We come back to test, and we drop a second time. The second time, our drop takes us to 1912.5. From 16 to 12.5, it's 3.5 points. Okay, at $50 per point per contract. Once you complete your time in the simulator, once you've become consistently profitable, you'll go live with one contract. You only add contracts with profits you add in the market, with profits you earn in the market. We don't add contracts from our 401k or an IDA. You must, if you want to follow our protocol, you will earn the money each time you add an additional contract. That's how you get from 1 to 20 over the period of 24 months. Okay? All right. And so from 34, we trigger and we drop down to 32. 2 points. All right, we're back up. We drop again. The second time we drop to 30 and a half. Back up. Again we drop. This time to 26. That's an 8-point drop. Back up. Trigger again. And on this trigger, this swing all the way down to 1920.75. From 34 to 21. It's 13 points. Back up to trigger again. You see the swing high on this candle is 34.75. It's 3 ticks above the trigger. All we need is 1 tick above the trigger, and that sets us up for another trade. Okay? You don't have to trade off the hourly chart. Once you are in position to put on a trade, long or short, you can then scale down to the chart we use every day in the live trading room, which is a range chart that enables you to risk 8 ticks, just 8 ticks on every market, every trade, every market. Even the volatile markets like crude, gold, Russell, we never risk more than 8 ticks per trade. All right. So from 34, we're back up. We drop again. The day is over. We're now moving into the 24th. So let's take a look at the alerts that were sent out on the night. Let me run you through these. The Dow, now on Tuesday evening, I'm recapping what happened on Monday night's alerts. The Dow, if you were short, our alert at 16,160, it was a 200-point drop. The Russell pays $100 per point. We dropped 17 points, $1,700 potential. The previous night's crude short was good for 83 ticks, $10 per tick, $830. The euro, 60 ticks. Gold, I didn't recap. That may have been the day gold didn't trigger. Bonds. When stocks go down, bonds have a tendency to go up. 30-year treasuries, if you were short 154.13 on the 22nd, based off of the alert sent out the evening of the 21st, there was over $1,000 per contract potential in that move. And soybeans got stopped out. That happens. In the real world of trading, stops happen. And if you don't use a hard stop, you won't be happening very long. That's part of what we teach you in our 90-day mentoring program. Okay, let's jump forward to Wednesday. On the S&P 500 Emini Futures, the ES, we're in the December contract, Z5, long above 53, short below 26. Here's the short below 26. The first time we dropped to 17. That would be 9 points. The daily goal is 2 points. Weekly goal is 10. This 2-hour move is good from 9. Okay. Now, you can trail your stop, take as much as you can out of the move. You can only take what the market makes available, but you'll never take all of it. Okay. At some point, price is going to come back and take out your trailing stop. Now, can you put a hard target in and take yourself out? Yes. In fact, we'll teach you how to do both of those. Let the market take you out with profit, or take you out with minimal loss, or you'll use a hard target and a hard stop and take yourself out. Okay? All right. Important prices, important areas. You know the deal. As soon as we get back over 26, that resets the trade. This time we drop to 19.5. So 6.5 point drop. Reset. Trigger. This time we drop from 26 all the way to a swing low of 1900.25. So we were 1 tick shy of a 26 tick drop. Okay? All right. That brings us up to Thursday evening, September 24th. The alerts were a little late coming out because every Thursday evening we do a partners workshop. That's where the whole gang gathers. We're not trading live markets during the workshop. Each day in the live trading room, that's exactly what we're doing. We're trading real money in real time in front of real people. But on Thursday nights, discussion, training, Q&A. The alert Thursday night said to be long above 1948 or short below 1908. 1948, swing high, 1951. Somewhat of an anticlimactic end to a very nice week in the S&P 500. Did that allow us to get our 2-point daily goal? Yes, it actually did go 3 points. Not only did it go 3 points, but in that hour it dropped back below the trigger. And in the following hour, there was an opportunity to go from 48 up to 49.75. So 7 out of 8 ticks. We never triggered on the short side 1908. Okay? That wraps up the week for the S&P 500 Emini Futures. That was the week ending 9/25/15. We have 2 trials available. CFRN.net/apply. That's if you want to just hang out in the live trading room. If you want to actually receive these alerts in your inbox, the exact same alerts that our partners and clients receive for 5 consecutive trading days, I want you to email me support@cfrn.net. Just tell me I would like to take that trial. If you're going to come hang out in the live trading room with us, that's great. If you want my alerts, I want to know who you are. Now, if you take this trial, you also get this trial by default. So not only will you receive the alerts via email every night, looking just like that, you'll also have access to our platform, data, proprietary indicators. You'll be able to join us each day for 5 days in the live trading room from 9:30 a.m. to 11:30 a.m. Eastern. 2 hours. We then break for 30 minutes, come back, do 2 hours of live radio talking about the markets, the headlines, and life. All right? Hope to see you in the live trading room. If you have any questions about anything at all we've covered, email me support@cfrn.net, and you can call us at 949-42-EMINI. That's 949-42-EMINI. I'll see you in the trading room.